Hello, ladies and gentlemen. Welcome back. It's Ronald. Today it's not gonna be a long form video. I'm still working on the next one of those. We're just gonna kind of revisit market narratives, kind of like I did back in, I believe, December, January, about then, at which point I was calling for a crypto winter. And as we can all see at this point in July, I've been right? For almost a year I've been right. We're definitely in a crypto winter. We're definitely in a bear market. I think almost everybody accepts the idea that we're in crypto winter right now. Even, companies like Binance, Coinbase, etc., they're all reorganizing and stuff under the assumption that winter is here. What does that mean? So let's talk about that. So in my previous videos, I had said, okay, so we're in a bear market, but if we're going to talk about that, we need a definition for what a bear market is. In traditional markets, a lot of people say 20% drop from all-time high. This is super vague. It doesn't necessarily work super well for even traditional markets all the time, and it certainly doesn't work very well for crypto markets. 20% is not that big of a deal for us. So another thing that is actually also used in traditional markets is 20% for 2 months, which is what I adopted at that point because I think it's reasonable. I haven't done a formal analysis of exactly how useful that is, but also given that we've only seen slightly more than a decade of Bitcoin, it may not even be really worth you doing that analysis yet for maybe another decade or so. At least for the moment, that's my running definition, 20%, 2 months, and we're officially at that, something like maybe 76% drop from all-time high at this point. It's been going on for about 256 days or so, which we'll take a specific look at in a second. But first thing I want to establish, so we're going to talk about a couple things, the bear market, the macro narrative, the crypto narrative in particular, and a couple of specific projects. We'll go over my own particular portfolio at the end. But first I want to talk about the bear market, okay? So we are definitely in a bear market. Just by our own metrics, if we say, from the top, which was around November, about 69,000 or so, we're the bottom that we've seen so far is about 17K, and that's about 24% of the 69. So we've dropped down to like 75%. So definitely more than 20%. Just about everybody would agree that we're in a bear market. Do we agree that we're in crypto winter? If you've seen my previous video on a history of crypto winters and bear markets, we've gone into this in excruciating detail. I'll give you a brief recap right now. A couple of the major Bitcoin bear markets in the past have largely been analyzed, in my opinion, most accurately through narratives, and that's pretty much how I digest the entire market. Is not really through technical measures. Long-term investor, I don't really care, but narratives are super important. 2012, we see something somewhat similar to what's been happening lately. In fact, it's playing out almost exactly the same way. See a bunch of hacks, TradeHill, Linode, Bitcoinica, etc. That really drastically decreases our prices. 185 days with a 40% decline. And then we see another 111 days with a 37% decline. Now, these are in 2012. Both of them are in 2012. So I made the argument in that previous video that this is actually essentially the same bear market and that it's more of kind of like a crypto winter. If you were to talk about this in terms of total days, which I think makes sense given how close they are and the fact that they are mechanistically related. A lot of these same hacks were what brought the second bear market. It's just that it was the lawsuits in response to those hacks. And so if you add up, 185, 111, what is that? 296. It's almost 300 days. So the other crypto winter was in 2013 with the fall of Silk Road, and that was about 415 days. With an 83% drawdown. I forget what the other one was, but there was an 86% drawdown. It might just be a different reading of this one. We'll see. But just under 300 days, just over 400 days, I would call it, conceptually for now, crypto bear market average lasts about a year. Let's just off bat. About a year. And the average drawdown is maybe 80-ish% to call it a winter. That's interesting. That might be something we could look into. What's more important for winter is duration or percent decline? Given that there's only been a couple in the past, it's hard to say for sure. You only have a very small sample size. We're seeing another one right now. We'll see. And it'll be important to see this time because in 2022, we have a real recession, right? Bitcoin, people make a lot of hay about the fact that Bitcoin hasn't seen a real recession. It's holding up really well so far. I'll give you some reasons to be pessimistic about that in a hot second. But it doesn't seem to have been it seemed to be as big a deal, this whole recession thing for Bitcoin, as some people thought it would be. Because we're only down 75%, not 83 or 86%. But anyway, we're in a bear market by the numbers and by sentiment. What do I mean by sentiment? Basically something like this. So crypto projects don't really have earnings reports. They don't really have all the same types of, layoffs, etc. A lot of the same things that companies have. But the way sentiment responds to news is also important when we talk about bear markets and bull markets. Bad stuff can happen in a bull market and prices will still go up. In a bull market, and then in a bear market, good stuff can happen and prices will still stay flat or go down. Especially in tech and the stock market, that's what we've been seeing a lot lately. IBM most recently is a good demonstration of this. They beat earnings and still slid down, right? Now they also point out strong tech demand. This is somewhat questionable. But anyway, if you look at other companies like, for instance, Apple, there was one part of their earnings that I think was slightly lower, but overall of their earnings call that was negative. But their most recent one, I believe they beat on earnings and their stock still went down, which is really characteristic of what we see in a bear market, right? So they either beat or meet expectations and guidance, and then, the market still doesn't care that much. Whereas if this was a bull market, they could meet guidance and stock would still go up. Apple beating guidance and still not doing well is kind of a big deal, especially given that if Apple is such a big part of the S&P 500. If you own an S&P 500 ETF, a lot of this is just tech stocks. It's the majority, literally the large majority. Like 80% plus is just in the largest 5 companies or so. So you own a lot of Apple if you have S&P 500. And a lot of them are just not doing so well regardless of how well the company seems to be doing and how much money they're making. A lot of them are adjusting guidance downward, so they expect things to continue to be bad. The way that sentiment is shaping up, I think definitely we can all agree this is a bear market. Most of us will agree that this is a crypto winter. Then the next question becomes, what's going to happen from here? And what's going on with that macro narrative? So I've kind of touched on that already, right? 253 days is since around November 8th. November 8th is roughly when we peaked, around 69K. So we've been going through this for about 253 days. If we say that 296 was the shortest crypto winter, we could be within a month or two of going back into a bull run, which would be cool. But if it's closer to 400 or longer than 400, because once again, this is a global recession with a war as a macroeconomic backdrop with Russia and Ukraine. So at earliest, at least if we're talking about historically, at least another month or two of this bear market before we start to see a turnaround. So is this recent uptrend for real? Is that all part of, the start of this? It's possible. With more VC money, more institutional buyers, more people that are, taking coins off exchanges and fewer people selling, it's possible that we don't go as low, that it doesn't last as long. But I'd have to see that to believe it. honestly. So that's where we are, about 75% and 253 days in. We could go, at least historically, another almost 200 days and another, 10%. And that could be as low as 9,666. So that's technically on the table. It's possible. But Jim Cramer also just went bearish on Ethereum. So who knows? Maybe the whole market will skyrocket in the next couple of days. If you're going by the Cramer indicator. So that's timeline-wise. If we're talking about crypto as in a bubble, the macro backdrop overall is a lot more complicated than that, right? So there's that war, which is there's war and there's an inflation. So when I talk about macro backdrop, that's mainly what I'm thinking of. There's war and there's inflation. The war can kind of go one of three ways, but really more like two. Ukraine could win and Russia could lose. Highly unlikely. I don't think Russia is just going to flat out lose. They have too many options. I doubt they're going to give up. Or Ukraine loses, or we get a compromise. Ukraine losing is possible, but what I'd be more worried about at that point is how the rest of the world will respond to that, right? Because if it's more of a Crimea situation where we have more important things going on, Crimea happened in like 2014 or something, and we all kind of forgot about that shit real quick. We just kind of moved on. And ultimately, that can happen again here. It can. You can make the case that it shouldn't, that this is an unjust war and that, there's all these other factors. But it can happen again if NATO is willing to let it go. And Russia is willing to let things go. Because, yes, they wanted to invade Ukraine to stop it from joining NATO. But there's other reasons as well, right? They need Ukraine to make sure that they can run water supply lines through Crimea so they can maintain their hold on Crimea. Right now there's a water shortage in Crimea. If they can't supply that, well, their ability to hold on to Crimea starts to become very questionable. So they have a lot of reasons to want Ukraine. And also at this point, their positioning is worse than it was in the beginning, right? Finland and Sweden are both applying to join NATO, which is something that they really don't want to happen. But it's happening. Two more, closer proximity members of NATO, increased military might of NATO overall. So their invasion is essentially at the opposite effect with regards to that. So at the very least, I suspect they'll push onward to at least have Ukraine to show for all of this nonsense. But even then, if they do that, if that's what they're going to opt for, they need to do it relatively soon. I don't think their economy can really handle a prolonged war. Ukraine's definitely can't, but Russia also isn't exactly set up for that very well, especially if the other powers are really putting military and financial backing to Ukraine publicly. So who knows? Who knows if this goes more in the direction of like a world war or something? Then yeah, everything I've just said is largely irrelevant. Everything else that's happening is irrelevant. If this becomes World War III, all bets are off. If we are able to move past this in any way, and literally any resolution, I'm okay with it because literally like 10% of the world's calories are being directly affected by the war. Russia and Ukraine together make not most, but I believe like 25% of the grain of the world. And, there's other mineral deposits that are super, super important in terms of like precious metals and lithium and stuff like that. I don't know about lithium specifically, but they have a lot of precious metal deposits in Ukraine. They have a crap ton of grain in Ukraine. They're actually very, very economically important. I actually think this is a whole different argument, but I think the economic argument for why Putin invaded Ukraine actually makes a bit more sense than the political argument. That's a whole other thing. But how the war in Russia and Ukraine ends is going to be a really big factor. And then inflation. I mean, CPI, something like 9.1% most recently. That's crazy. We're now at this point talking about Jerome Powell and the Fed potentially Paul Volckering the whole thing and just kind of going for a 100 basis point or 1% increase in the federal funds rate, which will affect all of those interest-dependent spending type things, cars, homes, and typically investments like equities. So your retirement funds, your pension plans, 401ks, IRAs, all of these things commonly, especially if your employer or some other, they have it managed through your employer. They're typically investing in a large basket of broad market kind of index, not really index funds. They usually replicate index funds with individual assets in a bunch of different sectors. But anyway, they're investing basically. So cars, homes, investments. These things are all, the federal funds rate going up is going to act like gravity for those prices. Used cars have been appreciating. Pretty sure that bubble is about to burst. Homes have been appreciating. The dynamics in the real estate market are a little bit different. I don't know that national median average price is actually going to go down very much. In some markets, I do not doubt that it will. Average national, I don't know that that's actually going to go down. But houses are definitely staying on the market longer. And prices are softening. So it's becoming more of a buyer's market. But we'll see how that plays out going forward. With rates going up, the dynamic will change a little bit. So macro-wise, if things go okay with the war and inflation it doesn't get all the way away from us, we should be okay. I think there's a decent chance that we'll be okay. We'll see. Let's talk about the crypto narrative for a moment. This is kind of more relevant to what we have typically been talking about more recently on this channel. The word of the day is contagion, right? And we all kind of know what I mean when I say this, right? It all started with Terra. Terra Luna collapsed. It was a Ponzi scheme and it was extremely poorly managed. Terra Luna collapsed. Then all of a sudden we find out that all of these exchanges and VCs and stuff, they've lent each other money. And it's kind of all circular. They all owe each other the same money. And it's kind of led to this domino effect where we had Celsius go under. 3 Arrows Capital went under. They owed, Voyager some money. Voyager is now going under. Celsius repaid some of its debts, but now it's filing for Chapter 11. Celsius, 3 Arrows Capital. 3 Arrows Capital is essentially gone. They're now ghosting their creditors. They're hoping they can just walk away from this. It's not going to work out. Voyager is now struggling. I believe they are also going bankrupt, despite the FTX bailout. Sam Bankman-Fried and FTX are trying to become the angels of the entire crypto market, buying their way into different companies to try and... It seems like they're positioning themselves to kind of own all of the background financials of crypto. It's really interesting to see how this will play because right now Sam Bankman-Fried is quietly becoming the most powerful man in all of cryptocurrency. He is right now more important than Satoshi Nakamoto, I would say. He's the man right now. So Sam Bankman-Fried has a lot to say. He says the worst is behind us now. Why does he say that? There's two potential motivations for that, right? Either he plans on using so much of his fortune as a potential backstop that he feels he can guarantee that the worst is behind us, or he knows that the worst is not behind us, and he wants to be able to sell a little bit out as the sentiment goes up because he knows his word carries that much weight, and then the market goes down and he's left in a bit of profit. Giving him the benefit of the doubt, that's not what he is. If he really thinks that what he has is able to backstop the entire crypto market, I hope that's not what he thinks because that's dumb. It's not going to work. If the macro headwinds are big enough, even the money that he has will not be enough. It's nonsense. So I'm keeping track of this whole crypto winter 2022 thing, narrative, this whole drama that's going on, started with Luna, and now it's taking all these other exchanges and stuff with it. Kind of like I was saying, the first two bear markets, right? The lawsuits and the exchanges going down. I mean, that's been happening lately. So I think it'll play out as effectively a lot like the 2012-2013 saga there. And you know what? 2012 then led in, we had a year of uptime, and then 2013 to 2015, it went straight back into crypto winter. So even if things get better in the near to midterm, there's no guarantee within the next 2 years we're actually going to have any real breathing room. If anything, my most bullish time for us is still going to be 2024, next halving. I don't know that we can say a lot positive until the next halving. So we'll keep an eye on that contagion. We'll see if it continues to spread. USDT, Tether, had briefly depegged after the Terra Luna incident. They did not go down somehow. I don't know how they didn't go down. Good for them. I'm glad they didn't, because as I've stated before in that previous narrative video, Tether is like a third of the trading volume, the real daily trading volume of Ethereum and Bitcoin on any given day. If they go down, I mean, 10K, sub 10K Bitcoin is, I would say, almost guaranteed. We'd be into thousands for Bitcoin for potentially a year or two. Like it would be really bad if Tether went down. It would be catastrophic if Tether went down. It would be a big deal. So far, that hasn't happened. If that shoe drops, once again, that would almost be on par with inflation getting out of control or a world war. That would be huge for crypto in particular. If Tether went down, they're that big. So we'll see. That contagion has a ways to go potentially. I'm short to midterm bearish right now still. If either of those things turn around, inflation or the war, I'm willing to start reconsidering that position. Right now, I'm still pretty leaned into that winter narrative. I'll make another video revisiting it once any of this changes, but that's where I kind of stand. So to, end things off, let's talk about my portfolio, and let's talk about some individual projects. So when I first transferred over to Ledger, I had about 23,000. Since then, we've been kind of slowly meandering downwards to a low of about 10,000 last month. And since then, we've gone from 10,000 to 16,000. So what the heck happened? What's been going on there? A lot of my holdings are very similar. I've exclusively, since that last time I called the bear market, I've exclusively been buying Bitcoin, Ethereum, and MATIC. And Ethereum out of these is the least that I've been buying. MATIC is the second most. Bitcoin is by far the most. So I'm doing that very classic bear market strategy where you go to Bitcoin for safety. I think it's a good idea. Bitcoin is the one that survives. Ethereum has typically survived in the past, but there was a year where XRP topped it, right? Ethereum has been flippant. So it's not guaranteed, but that's not why Ethereum is not one of my big picks right now. It's primarily because, I think the future is primarily layer 2 for Ethereum. And I think MATIC and, the layer 2s like Arbitrum, Optimism, we'll talk about that in a second. Those may be big, Arbitrum in particular. I don't think Optimism, but MATIC has a lot of things going for it. That's why I'm kind of sticking with it. We'll discuss that in a second. The only major change that I've made to the portfolio is really just this, right? I've sold almost all of my Solana. I have a couple left in staking, but just a tiny little bit, right? Just a tiny little bit. Almost all of my Solana is gone. Why is that? So you can probably guess, right? Solana's been down 7 times in 12 months, and that's pretty unacceptable. The standard retort from most Solana holdouts at this point is two things. One is VC money, and the other is technical performance. Why don't we address technical performance first? First of all, no, right? Going down 7 times in 12 months is not good technical performance. I don't care about your TPS or finality time or your fees. That's terrible. It's unacceptable for a system that purports to be a financial system. The typical response to that is that it's in beta. Okay, it's in beta. But why are you doing a beta that allows for the management of this much money that puts it in a top 10 crypto spot if your network is this unstable? That's irresponsible. They should not be doing that. Seriously, they should not be doing that. Like, if they can't handle it, 7 times in 12 months means you can't handle it. You need to change something. Every single time it goes down like this, they go on and they say, okay, we found a fix for that within 24 hours. And people are like, look how quickly they responded. I don't care how quickly they responded. They had to respond 7 times in 12 months. Every couple of months, Solana goes down. That's a big deal. I don't care if it's in beta or not. Even if it's in beta, you're taking time to accumulate bad press. The idea that you're just going to put out a product that will do, billions in trading volume while also not guaranteeing that it can exist, continuously, and that there can be random outages that can lose people millions of dollars. That's not acceptable. You can't do that, right? I don't care how much TPS you have. The other part of that argument then is so from when we talk about technical performance, people are typically talking about fees, finality time, and TPS. Finality time and TPS are very malleable things in terms of how we think about them. Alexei Chepernoy of Ergo doesn't particularly like to talk in those terms because the way they're setting up their transactions, multiple inputs, multiple outputs for each transaction means that when we talk about TPS, it doesn't really matter. It doesn't translate directly. And if more projects go that way in the future, which I believe Cardano is as well, TPS just won't make sense very much as a metric. Now, you could argue that that's really just TPS with extra steps, but really it doesn't matter. It doesn't matter, right? Because Solana isn't even the best option if we're talking about that, right? Because, yeah, Solana's layer 1 has 65K or thereabouts, 50K for TPS and really great finality time, but they're not actually the only ones that can do that, right? Because remember, technically, theoretically, their layer 1 has that. Polygon also has more than that. They can do 6-figure TPS, and their fees are also extremely low, and they don't have 7 unplanned downtimes in the last 12 months, right? So in terms of performance, you're not stuck with Solana as the best TPS and the best everything. There's no reason to think that. On top of that, Solana is highly centralized. If you want TPS at the expense of other things, we already have systems that can beat Solana, right? Visa is better than Solana. Actually, no, that's not technically true, is it? But the collection of Visa, MasterCard, and the way it's set up with the hub and spoke model with credit cards and stuff functions faster than Solana for more transactions. So the TPS and performance argument doesn't really convince me, and historically, performance and the technical performance has not really been a good indicator of whether a project survives or whether it's a good investment. Now, the other one is the VC money, right? The VC money, Solana has a lot of VC money. Well, it does. It's around here, 6.77% of crypto VC money. It is, as you will note, not the project with the most VC money in the crypto space. Polygon is well above it with 9%, more than 2% more of the total share. So Polygon has better funding, it has better technicals, it has better just about everything. And it is now becoming the de facto primary layer 2 for Ethereum. lot of things against Solana if those are the main things that we're talking about. Near protocol has even more. Near has even more than Polygon, right? So if we're talking about funding, Solana is not even close to the top. Avalanche, I believe, also has comparable founding. It's not on here. 1inch is on Avalanche. A couple of other things are on Avalanche, so you'd have to aggregate things to figure out exactly what Avalanche's share of this is, but they have a lot of VC funding as well. And the VC funding argument in particular is not very convincing for me because look at what has the most VC funding in the crypto world as of last month. It's Celsius, right? Celsius. And we all know what happened with Celsius. All that VC funding did not save them at all. So I don't care about that at all. At all. At all. Even a little bit. So that's Solana. I sold all my Solana. I don't care. I think there's better plays, and I'm very I'm very soft on them. I'm very soft on them. We'll see. Maybe this is a mistake. There's a reason I kept like 8 SOL, right? A very small nominal amount, which I'm staking. I don't have much faith in the community or in the development team anymore. And I think the crypto VCs, they keep talking about, oh, there's VCs, but VCs want money. And if the platform doesn't continue to improve and perform, those VCs aren't just going to stick around because they chose a product. And, smart investors don't work like that. You gotta take into account what the project has actually accomplished. Let's talk about MATIC and let's talk about Ethereum. Ethereum is trying to go to proof of stake. They have pushed their difficulty bomb back about a month because when they did the Ropsten testnet and it went live, they had a massive multi-block reorganization attack, which is catastrophic. Utterly catastrophic if that were to have happened on a live mainnet. That is never supposed to happen in crypto. Multiple blocks got reorganized. That's like a hacker getting in there and just being able to reorganize thousands of transactions to do whatever they want. Double spend, freezing transactions, reversing transactions. That's horrific. That's a never event. For a system that purports to be a global financial system for payments and banking and stuff like that, this should never happen. This is unacceptable. So thankfully that happened on a test net. It wasn't on a main net that was live. But also we've been working on this for like years and years. And this is where we're at, where catastrophic rewrites, multiple block reorganization attacks can happen. Whew. And now they're telling us that with one more month, they're going to have that fixed and we're going to go towards the merge in September 19th. I mean, okay, I'll have to see it to believe it. If they stay proof of work, I'm not necessarily that against it because they have a robust layer 2 ecosystem that can kind of take care of most of their transaction volume. And I mean, they've been falling on their face for years on that. I actually wonder if maybe they could just move towards sharding irrespective of the merge. Because you can have sharded proof of work systems. The sharding is what's going to decrease gas fees. A lot of this stuff is, a lot of the main improvements that we care about, the market cares about sharding. Proof of stake is whatever. It's whatever. It really is. I don't give a shit about proof of work, right? Proof of work works. It's fine. Ethereum, Bitcoin is still on it, and it's fine. Like, Ethereum can stay proof of work, and I'm not super upset. I don't care. What we need is sharding. And if they're going to put off sharding to get proof of stake working first, which I think is what they're trying to do, then we have a problem. Right? Because sharding needs to happen for Ethereum layer 1 to stay relevant, I believe. Because whenever usage goes up, the gas fees become unacceptable. They're actually okay right now. But that's because we're in a bear market and nobody's using anything, which is bad. When the market gets healthier and people are using it, it becomes the rich man's chain, and that's not really acceptable. So they need sharding. That's really what they need. This March thing, Not going to affect gas fees. It's going to have positive sentiment and, be nice for the price temporarily, but I couldn't care less. What I care about is sharding. This is largely irrelevant. It will not change the price of block space. It will not change a lot of the performance, right? Really what we need is sharding. That's what we care about. Now, actually, no, I take back one part of that. Proof of stake can improve performance a little bit. But price-wise, it won't help. So I don't care. I'm questioning whether this will actually happen on September 19th. And even if it happens on September 19th, long term, this is not the biggest impact. What we need is sharding, implementation of sharding, more than everything. That's Ethereum. That being said, what I'm kind of looking more into, what I think a lot of the returns that we can get out of Ethereum's continued existence and usage and success is not just from investing in layer 1 Ethereum, but investing in what is essentially their de facto layer 2 solution, which is Polygon's MATIC network. And Polygon does have their plasma bridge and their actual regular mainnet, which is their proof of stake chain, which is already proof of stake, already like a 6-figure TPS, very low fees. MATIC is fantastic, but it is, at least for the plasma bridge and proof of stake chain, pretty dependent on Ethereum. The plasma chain directly, the proof of stake chain somewhat more indirectly, but they are also branching out to connect other blockchains. So they are not crushed if Ethereum gets crushed. That's one thing I like. They have other things other than Ethereum that their business model and capabilities work for really well. But they have Hermes, Darkfall. They have all these initiatives that they're working on. Some of them that they've completed, like the Plasma Bridge, and other things that they're bringing to the market. Darkfall recently, Hermes that they're in the working, that is in the workings. But Polygon has been doing really well. A lot of my portfolio's performance recently, a lot of this 16K is because of Polygon. They were at like 40 cents. Now they're at like 92. It's fantastic. A 200% increase during a bear market. This is largely because of a lot of their recent news. Darkfall is one. The other is that they were recently chosen for Disney's accelerator, and it's Disney. I mean, it's Disney, right? They're the only blockchain that was chosen for this. It's kind of a big deal for them to be working with Disney. They're the only blockchain that's part of that. And they've had other big partnerships recently. So Facebook, Reddit, Stripe, DraftKings. So they do blockchain with verifiable randomness for gambling. Social media stuff, metaverse stuff, lots of really big partnerships, and they are, once again, Ethereum's de facto layer 2. Which means that in the future, if things continue to trend as is, with Ethereum as maintaining dominance, with Polygon making up the difference, they may essentially become the de facto primary NFT and DeFi center for crypto, provided that they still maintain, Ethereum, MATIC, those two together maintain a large chunk of TVL in DeFi. So I'm pretty darn bullish on MATIC, and that's why. They have things other than Ethereum. They're pretty much Ethereum's main layer 2 solution. And they have all these things that aren't dependent on Ethereum that almost makes them able to function like a layer 1, really. And they've been really robust in terms of their price action during the bear market, because their team is continuing to meet milestones, make large partnerships, and just perform. Their team is performing. That's the bottom line. They're getting things done, and it's working really well for them. So I'm very bullish on MATIC. Otherwise, I haven't changed a whole lot in terms of my portfolio composition. BAT continues to be a play because it's a token thing. I just like their Brave browser. This token is never actually going to go up. It's not going to appreciate very much. I don't recommend you buy into them. I just like Brave browser. Engine, I'm not super bullish on the future of blockchain gaming. I don't think we should be as gamers. But if it does get off, I think Engine is positioned well to take advantage of that. Polkadot, more of a meta chain, really good backing and developers, Gavin Wood, etc. They're doing really well. I'm hopeful for them. I bought a little bit more of them. Only other altcoin that I had really bought any more of during this bear market. Algorand, I'm just kind of sitting on the same position, slowly accruing their network rewards. We'll see. They're more marketed towards institutions and CBDCs, so it's hard to really take stock of exactly where they're going and how they're doing. Decentraland, they, alongside Sandbox, are kind of the main decentralized metaverse plays. Right now, I'm mainly just in Decentraland. We'll see. They've been holding up okay-ish, but they have a lot of reputable names going towards their platform, so especially once we flip back bullish again, we'll see how they fare versus Sandbox. It's kind of the main thing that I'm kind of thinking of, honestly, for them. Chainlink remains the only Oracle play worth even thinking about. They are utterly dominant, but their price does not reflect that. So I think they're undervalued, but I'm scared of buying more Link. I don't know why I'm scared, because at least logically I should be buying more. I should be. Because once again, they are the de facto head of oracles for the entire crypto space, to the point where nobody else is really even challenging them. They are the Bitcoin of crypto oracles. And at $7, that's an attractive price point. So maybe I will buy more. But I might make a video on Chainlink in particular. I don't like all of the technical aspects of what they've done. But for right now, I'm really just sitting on the position. And then if we go towards Coinbase, I can't unstake that ETH. It's kind of stuck there. I have almost 3 Ethereum, just kind of accumulating slowly. See how that goes. Avalanche, I got just a little bit more Avalanche. I'm really just at 10 still, not very much, which I'm just kind of chilling. I think eventually Ledger should get Avalanche support, at which point I'll move it over to cold storage. These others are just kind of holdovers from previous positions I've mostly traded out of at this point, not really doing much with it. And then I do still have Cardano. I have been buying more Cardano, actually. I should say that. I have more Cardano. And then I also made a Ergo wallet. I have about 84 Ergo, which I moved off of KuCoin onto here. And then I have about, this is a bit outdated, actually. This is supposed to be my Ergo wallet. Which I haven't updated on. Oh, yeah, that's why. It's a different machine. I haven't updated it yet. But I have about, this is also not updated. I have about 4,500 ADA. You're always just taking their sweet time. Or, sorry, 4,300. My bad. 4,300 ADA. Most of it from staking rewards, which is fantastic. Just free ADA. But I have bought a little bit more on that as well. And that's pretty much where we stand. I am slowly DCAing back into the stock market. We're at about 7,800 total assets. I'm moving more and more towards, ETFs, index funds, because I don't follow the stock market and specific companies as closely anymore. So I'm mostly going for market returns and stable dividend income, really. Most of my attention is on crypto. And was there anything else I want to talk about? I think that was mainly it. So in a bear market, in a crypto winter, most everyone agrees, we got to watch inflation, we got to watch the war, we got to watch Tether. The contagion may continue to spread until the prices get back, maybe above 25, 28K on Bitcoin. I think that contagion is still up in the air to continue spreading. I went out of Solana. We'll see if that plays out. Heavy into MATIC as a way of capitalizing off of Ethereum. Heavy into Bitcoin. And that's where we are. we'll see how that plays out in the next couple of months. Thanks for watching. More long-form content to come. Stay tuned.